Investing is something that might be scary to a lot of people, but I wanted to make a video to explain to you why it's something that you need to be doing in 2021. If you've been thinking about investing and if you haven't been sure whether or not it's something that you want to do, then hopefully this video will help you make a decision one way or another. I'm not a fan of long intros, so let's just jump straight in. Let's start with the fact that if you've got your money sitting in a bank account, even if it's a savings account, the likelihood is that your money is losing its value. It's super hard these days to find a bank account that can offer you a percentage higher than inflation, which means that essentially either your money is not gaining or losing any value if you found an account that can beat inflation, or if your account is lower than inflation, then you are probably losing money. Inflation generally sits at around 2%. I think at the moment it's a lot lower due to everything that's happening, but essentially you want to be earning at least more than 2% a year in interest to beat inflation in the long term. Now, the stock market historically generally has had a return of about 7 to 8% per year, which is a lot higher than inflation, as you know. Of course, it is important to remember that past performance is not an indicator of future performance, but it's something that's worth considering and taking into account when you're planning what to do with your money. The second reason you need to start investing in 2021 is compound interest. Essentially, all that means is that when your money makes you money and you reinvest that money, you will then have a bigger pot of money making you money. So as an example, if you have £100 and then you make £10 in interest or stock market gains, and you keep that £10 in there, next year or next month, you're going to be making interest on £110 rather than the original 100. Over time, this actually snowballs quite significantly. So I will take you through a quick example now.
So if we assume a £200 per month investment for 10 years with a 7% return per year, you're looking at having invested £24,000 and made a compound return of £11,000 in interest. However, if we invest that £24,000 over just 5 years, so if you start later in life, you're looking at only £5,000 of interest. So essentially losing about £6,000 just by starting later.
The third reason to consider starting investing in 2021 is that it is more liquid than assets like real estate. For me, real estate is something that I've considered in the past, but actually if you need access to that cash, it takes a really long time to sell a house. It's a lot quicker to sell some stocks than it is to sell a house. Both, of course, come with risks. So if you own a house and you rent it out, then your risk is that the tenants won't pay rent and that you'll have to pay the mortgage, or that your tenants will, destroy your property and all sorts of stuff like that. And obviously with the stock market, you've got the risk of your investments reducing in value as well as going up. But for me, I get around that by just investing in safer things like ETFs, which to me just seems the right choice at the moment. I'm not saying that I would never invest in real estate, and if I could afford both, I would. And of course, I am saving money for my own house that I'm building, so that's kind of like investing in real estate, but it is worth having at least a bit of your money in investments, in my opinion. The next reason you should start investing in 2021 is dividend income. The way I see it is, why are you going to spend money on pointless crap from the shops that you're probably going to get bored of in a few months' time, or even things like, I don't know, nights out where you're not even going to remember the drinks that you've drank, when you could be putting your money into buying things that are going to make you more money, such as dividend paying stocks. Essentially use your cash to buy you assets that generate income. The fifth reason to start investing this year is becoming financially independent. Now, of course, this is a much larger goal and this isn't something really that you're going to achieve in 1 year, but every little helps, Every larger goal starts with a single step, and I don't think there's many people that wouldn't like to be financially independent, And that doesn't necessarily mean not working, it just means having the option to work, choosing where, when, and how you want to work. And the best way to achieving this, if you look at all these YouTubers that are talking about financial independence, is through investing in the stock market. And finally, it's never been easier to start. There are so many companies now making it so easy for beginners to start investing their money and not having to pay loads of fees in order to do it. There are, of course, many different ways that you can do this. There are robo-advisors where, yes, you pay fees, but they tend to be smaller than fund managers, and there you don't really have to make investment decisions if you aren't comfortable in doing this. You've got all these robo-advisors like Nutmeg and Eureka, which, yes, they charge a fee, but they do all of the decisions for you. If you are comfortable in making your own investment decisions, however, and you want to get going with no commission and investing from as little as £1 and getting some free shares with it, then you've got apps like Free Trade and Trading 212, which are super simple for beginners. I do think Free Trade is actually much simpler, and that's where I started myself. But in there, you know, if you're not comfortable choosing individual stocks, you can also invest in ETFs. So there is so much out there telling you about the different types of investments and stuff like that. You can educate yourself and start putting your money away. The final thing I wanted to go through is a few things to remember before you start investing. So first things first, make sure you have an emergency fund before you start investing. Although investments are quite liquid, it can take some time to withdraw cash from your brokerage and stuff like that. So it's worth having a cash emergency fund on hand just in case something happens. And also you want to consider things such as what happens if you need that cash when something happens to the stock market like it did this year. Would you have wanted to withdraw your money when it had lost, 50% of its value? No, you'd want to keep it and hold it until it went back up in value. So don't put yourself in a position where you're going to have to take a cut to your money just because you don't have an emergency fund. You should also aim to invest long term. So invest cash that you don't need access to for years and years and years, because that's when you will make the biggest gain. The other thing to consider is making sure that you are okay with the level of risk you are taking. So there are safer investments, there are riskier investments. So the example I always use is ETFs versus individual stocks, where obviously investing in individual stocks is far riskier, especially as a beginner. So I always say that if you're a beginner, investing in index funds, ETFs, things like that is a lot safer. And lastly, the best time to start investing was 20 years ago, but the second best time is now. So really have a think about it, and you can always speak to a financial advisor if you're still unsure, but it's really worth considering investing this year if you haven't started yet. That's all for this video, guys. I hope you enjoyed it, and I hope it's motivated you to start investing if you haven't already, and I'll see you in the next one. Bye.